Hello, everyone. Welcome to Bitcoin Not Crypto. Today we have on Brian Brookshire, also known as a Bitcoin Overflow on Twitter X. We're going to talk about a bunch of different things, Bitcoin related, Bitcoin Treasury company related. I think the first thing here is to just kind of get a reintroduction of why somebody would be interested in investing in a Bitcoin Treasury company. What is a Bitcoin Treasury company, and like why would somebody be interested in investing in them?
Yeah, just to say a little bit more about me before we get started, I've recently come on board with H100 Group as the head of Bitcoin strategy. So that is the perspective that I am speaking from, but I've also been a long time investor in the space since before joining H100. And yeah, I think it's good to revisit why anyone should be interested in a Bitcoin treasury company in the first place, as opposed to say, a Bitcoin ETF or just spot Bitcoin. And I think that fundamentally, what is different about a Bitcoin treasury company is that Bitcoin treasury companies have a mandate to do essentially one thing, which is increase Bitcoin exposure through the KPI Bitcoin per share. And there are a couple of different ways of doing that. Fundamentally, there are two arbitrages that are engaged when a Bitcoin treasury company is able to increase Bitcoin per share. The first and foremost is capturing the spread between interest rates and Bitcoin appreciation. Let's say that you think that Bitcoin is going to appreciate for 30% over the next 10 years. This is a common figure cited by Michael Saylor. And interest rates over that time are going to be 5% or even 10%, depending on how you're able to issue a credit product into the market. That gives a spread that you can capture to buy Bitcoin with. If you can buy Bitcoin that's going to appreciate at 30% per year, and you can borrow at 10% per year, how much money would you borrow to do that? The answer is as much as you possibly could. Now, for risk management purposes, you wouldn't go all in on leverage. You do have to be careful with that because, as we all know, Bitcoin does tend to have cycles, and you have to protect yourself in a drawdown. So, a common leverage ratio is something more like 20 to 30%, which, if you think about it, makes sense. If you think Bitcoin could have a 70 to 80% drawdown, that gives you the protection you need. The other arbitrage is the difference between the underlying Bitcoin net asset value and the share price of the stock. So let's say that there is, within your shares, there's $1 worth of Bitcoin value that share represents an ownership of. But the share trades for, say, $2. Well, if you sell that share for $2, you can go buy $2 worth of Bitcoin, whereas it originally only represented $1 worth of Bitcoin exposure. So there's a profitable spread to capture. And why might that spread exist? For an ETF, typically it would not. It actually kind of shadow exists because ETFs, contrary to popular belief, don't perfectly track the underlying asset value. They do deviate. And there's a mechanism that most people don't see called the share creation redemption mechanism, which allows authorized participants, which are institutions and not individual retail investors, to capture the difference when it's trading above or when the ETF is trading above or below the Bitcoin asset value. So in the case of Bitcoin Treasury Company, if the difference between the Bitcoin value and the share price is just because of volatility, well, that's one possible way that there can be deviation. But the more, I think, salient factor is that stocks are forward-looking, equities are forward-looking. If you have a company that's able to increase Bitcoin per share over time, why would you price it at 1 times the net asset value? No other equity is priced that way. If you look at, normally the way an equity is priced is, through a PE ratio, and you can get multiples of 30, sometimes 50, even 100 times the earnings. There's no stock out there that's priced at 1 times earnings. It's simply not done. And so that's another reason why there could potentially be a difference between the Bitcoin net asset value and the share price. So just to recap that, 2 fundamental reasons: equities are forward-looking, and 2, the Bitcoin treasury company is able to increase that Bitcoin per share exposure over time. So you're essentially buying it not for the Bitcoin it has today, but for the Bitcoin that it could have tomorrow. And those two arbitrages, the arbitrage on interest rates and the arbitrage on the share value versus underlying holdings, those interlock because some of the instruments that Bitcoin treasury companies use are instruments like convertible bonds. And what is a convertible bond? I think that the simplest way to put it is that in financial lingo, it's often described as a hybrid instrument that's part bond-like and part equity-like. I think that's a little bit confusing. The simplest way to think about it is a loan that you pay back with shares instead of with cash. So, and they're typically priced at a premium. So if say H100 or some other Bitcoin treasury company goes out and issues a convertible bond, that bond might be priced at 130% of the current share price. So if the share price is trading already, say at 1.5x or 2x or however much the underlying Bitcoin asset value that it's trading at, and you add another 30% on top of that, then you've got these stackable premiums that are making that transaction even more accretive to the common shareholder in terms of Bitcoin per share. And so that is how those two different components can fit together. Another common instrument, which H100 does not currently do, but is often talked about in the industry, is preferred stocks. And that's a little bit of a different setup. The way that Strategy, who's pioneered the field on this, has done them, is that it's a perpetual preferred stock. So it acts kind of like an interest-only loan where the principal never comes due. They're paying interest rates in the neighborhood of 10% on most of these, which, if your expectation is that Bitcoin CAGR is going to be 30% over the next 10 or 20 years, then you still come out ahead on. And the nature of those liabilities, I think, is widely misunderstood. People tend to focus on the fact that the liability is perpetual. They're adding on, forever interest payments. But one thing every Bitcoiner has probably seen is the charts that show the value of a home going down in time in Bitcoin terms. First it was, you needed maybe millions of Bitcoin to buy a house. Now you need just a couple of Bitcoin to buy a house. Well, the same thing is happening with the liabilities on these coupon payments for, coupons, so dividend payments on the preferred stocks, because the underlying value of their shares is generally not increasing over time. You've got compounding Bitcoin versus non-compounding preferred stock dividends. And so the liability that has to be paid back is going down over time.
Because it's priced in dollars that are depreciating in value.
Right. Let's say you have $1 million worth of preferred stocks paying a 10% coupon or 10% dividend. So every year that dividend is the same 10,000 or that same $100,000 every year, unchanging. But if let's say over a 10-year time period, Bitcoin goes to, let's say, let's be generous, even 20-year time period, let's say Bitcoin goes to $10 million. That's a common figure that a lot of people think Bitcoin could reach within the next 20 years. So Bitcoin does 100x, but and if you assume share price keeps up with that, and the Bitcoin doesn't add, and the Bitcoin treasury company doesn't add any Bitcoin to their holdings, just constant MNAV, constant holdings, but only Bitcoin price changes. Well, now it takes only 10% of, actually 1%. So just for easy math, let's say Bitcoin's $100,000 now. It goes to $10 million, 100x. So you're only paying, if you're selling shares to pay those coupons, to pay those dividends, then you only need to sell 1% as many shares to pay the dividends as you did before. And if Bitcoin keeps compounding, then that number just keeps on going down. So those are a couple of the common instruments that are used in the industry by Bitcoin treasury companies to increase Bitcoin per share and how they work. And also, as I described them, the two interlocking arbitrages that Bitcoin treasury companies exploit, which is the difference between interest rates and Bitcoin CAGR, and the difference between the share price and the underlying Bitcoin value.
One thing you mentioned there is sort of the interlocking and sort of the combination of having those two types of abilities for these companies: the issuance of new shares at a premium, and the ability to acquire debt and arbitrage the cost of that debt compared to the asset that they're acquiring, which is Bitcoin, and the growth of that value of the Bitcoin on their balance sheet. So the one side there, an individual could do, like I could take out a loan, whether that's a character based or secured or some type of loan at some rate and acquire Bitcoin with that. And that Bitcoin could appreciate beyond the cost of that loan. Um, but you're saying kind of the other arm of that, which I don't have the ability to do an ATM or like issue shares of myself, right? So are you saying that kind of that inaccessibility of that side of it is what makes uh, a Bitcoin treasury company have sort of an outsized value proposition?
I'd say that's one aspect of it. You can't, individual can't issue convertible bonds. They can't issue preferred stocks. You can go out, go to your bank and see if they will give you an interest-only loan where you never have to pay back the principal. I don't think you have a lot of luck. So yeah, it's definitely one aspect of it is that there are instruments that are available to operating companies that are not available to individuals, and certainly not available to ETFs. And the other aspect of it is that not everybody wants to be a portfolio manager for themselves. If you're managing your own leverage, that's a lot of work. You have to have your own risk framework for managing it. You also have to deal with the stress that comes with watching your position move around as Bitcoin volatility does what Bitcoin volatility does. So, another thing you're getting with the Bitcoin Treasury Company is of course, not financial advice, but another thing you're getting with the Bitcoin Treasury Company is a professional risk management team, and who's doing all of this for you, issuing instruments you can issue, managing leverage on your behalf in such a way that it can potentially be very stressful for the individual, or that's any given individual either may not be capable of doing or simply doesn't want to do.
Yeah, that makes sense. That makes sense. So I think one of the things here that I really want to get into is the sustainability of the share issuance as a tool to pay dividends or to increase Bitcoin per share if there's a premium on the shares to the Bitcoin holdings. I think this is something that's been kind of called into question by a lot of retail traders around Bitcoin recently, or sorry, around like strategy. MSTR is the main one that everybody talks about, right? A lot of people are saying they should sell some of their Bitcoin just to prove that they're able to do that. They're able to pay dividends with that. It would be much smaller than the amount of Bitcoin they've been able to acquire. Other people are fine with the share issuance. Maybe I could just get your thoughts on that and maybe a little bit more of an explanation of why. Like, do you have any insight on either of those positions that people hold with that conversation?
Sure, there are a couple of different things to say there, and the guiding light of the Bitcoin Treasury Company should always be Bitcoin per share. And if at any point in time the stock is trading above 1 times MNAV, there's no reason to sell the Bitcoin to pay the dividends. It makes no sense. If the stock is trading above 1 times MNAV, it's always more accretive to sell the stock than to sell Bitcoin. And so most of this conversation becomes relevant in a bear market. If the stock is trading below 1 times MNAV, then you could theoretically sell Bitcoin to do a share buyback. And I think we will see some companies try that. It's notable that Strategy itself in the past bear market, which is really the only data point we have for this type of operation, did not sell Bitcoin to do share buybacks. They did sell, I don't remember the exact amount, a very, very tiny amount, and said it was for tax loss harvesting purposes in the last bear market, but it wasn't for share buybacks. So yeah, it's theoretically possible. I think the open questions are, what does that do to investor sentiment? Because the presumption is that if the company is in a position where it has to do this in the first place, that Bitcoin itself is probably in a bear market. And if you sell the Bitcoin, does that call into question the company's commitment to the Bitcoin accumulation strategy? Does it call into question their belief, in Bitcoin? There's a lot of questions it raises. So, in my view, it's theoretically possible, but I think it's still something that we have to really see how it plays out in terms of how the market will react to such a move. But it's definitely I think something that companies should have potentially in the playbook. I don't think any move should be off the table. It's something that a smaller company might be more reticent to do. If you have very small Bitcoin holdings and it's a Bitcoin bear market, and sentiment is very low, you could get into a position where shorts are able to quickly move your stack down. So that's one risk to be aware of. So it's a very nuanced subject, which I think there are compelling reasons to either do or not do, and I think we'll see many different strategies employed. Um, Another thing I would comment about in terms of share sales is that I think a lot of the conversation around the ATM starts from false premises. That there's the way that share sales have been portrayed in terms of using an ATM is that people kind of think, oh well, MicroStrategy was trading at 3x MNAV, had this huge move up. They turned on the ATM and it flattened it, and that is absolutely not what happened at all. The heaviest periods of the ATM selling started several weeks prior to the peak. Price actually rose into the heaviest ATM selling that they did. Moreover, the ATM wasn't new. This is not a new strategy by strategy. They've used ATMs in the past, certainly not to the scale as this one. Relative to the market cap, it is potentially larger in the past, but it really just was not in the popular consciousness to the degree that it is today. And if you look at a chart in November, and every metric on price, on implied volatility, on MNAV, there was a clear blow off top, and people are using that one data point as the norm and the reference points, which is just wrong. And there was the expectation that if they turned off the ATM, that the price would immediately reinflate to 2.5x MNAV, which didn't happen. And if you look at historically, it's actually fairly uncommon that strategy traded above the 2.5x MNAV mark. That's more the exception than the rule. So I think when you're doing an analysis of this type of situation, first you have to start off with the right facts. And I think a lot of these conversations about MNAV just they don't start from the right facts. So in terms of what are the limits of share selling, I don't think we've reached them, frankly. I mean, strategy is still doing ATMs. Other companies are still doing ATMs. There are still many companies out there trading well above 1x MNAV that are able to issue into the market. Even right now, which is admittedly a period of low sentiment in the industry, companies are still able to raise. H100 does not currently utilize an ATM. We have been mostly reliant on private placements and convertible bond issues, but we're still able to raise in this environment through equity issuances as well. So I think the limits have definitely not been reached. I also think that the primary factor that determines how accretive an equity issuance is, which is the MNAV, how high above the underlying Bitcoin value is the stock trading. That in itself is a highly volatile metric. You see a lot of these pretty charts that show MNAV steadily declining on a log graph. Well, log graphs hide a lot of hide a lot of things. If you just look over the past 5 years of strategy trading, MNAV goes up, it goes down. It's very volatile, and it really depends what market sentiment is like, what phase Bitcoin is in its cyclic action. There are many different factors that affect it, and I think that a lot of the analysis that we see put out right now really focuses on very short time frames and really does not generalize well to what we've seen in the history of the Bitcoin treasury company trade.
Yeah, I want to talk a little bit about this recent sort of crescendo that we've seen with the retail sentiment and the noise. So you mentioned their strategy not often trading above 2.5 times MNAV. That's an interesting metric to look at because they put out guidance at one point that they weren't going to hit ATM advantageously or issue new shares into the market unless the MNAV was above that, or if it was for the purpose of paying dividends, they would. So there was sort of a caveat within there. Then it wasn't that long later they changed that, so now they can hit the ATM advantageously below that as well, which is basically kind of how they've been operating anyway. And that entire period in between there was a section of retail or a section of strategy enthusiasts who were very excited about this change, having this guidance. But Strategy's stock price, as far as I remember, traded basically sideways and down that entire time. It didn't seem to bolster the price up much, having this new guidance. Um, and now they don't have that, and it's just continuing to do what it seems to do. Um, so I guess my question is like, do you think that possibly they just did that to show that the ATM wasn't actually having that much effect on the stock? Or why do you think they changed, kind of went back and forth on these guidance and had that in the first place?
Yeah, I mean, we can only speculate without hearing it directly from Saylor himself. We can only speculate. It's possible that they wanted to show this. I don't know that that's the case, but it's certainly possible. Another thing that people have pointed out is that in the actual disclosures they submitted, I believe it was stated that the ATM, the MNEV guidance was at management discretion to start with, and so one of the infographics they put out just might not have had that on it, even though it was in the official disclosures, and the update to the graphic that was put out just contained what was already in the documents to start with. So there are a few different possibilities here. I think certainly the popular version of it, the widely received message of it was that they would not issue below 2.5x period. So I think that's certainly what the market believed. And then, it certainly affected, perception after they updated the graphic to say, okay, now it's at management discretion also. Yeah, I mean, it's hard to say what Saylor was thinking without him saying it himself, but there's certainly some possibilities there.
Fair enough. Yeah. So the other thing, I mean, this all kind of relates back to this idea of where we are right now in the period of Bitcoin treasury companies. I mean, there's been a huge amount of them being created. A bunch of companies announcing, you're a part of one of those. And do you think that this market is saturated at all right now?
Well, there's a few different aspects to that. I think that we have not yet seen all the Bitcoin treasury companies that will ultimately be successful launch yet. I think there are more companies to come that will be successful Bitcoin treasury companies. I'm of the view that every distinct market will have some version of a Bitcoin treasury company in it, and we're nowhere near that yet. That said, I do not think that it'll be the case that every market in the world has 100 Bitcoin treasury companies. At least not of the kind to differentiate companies that merely hold Bitcoin on their balance sheet and accumulate it versus what I would consider a Bitcoin treasury company, which is one that specifically exists for the purpose of increasing Bitcoin per share through equity offerings and through credit and debt offerings. That kind of company, I don't think every market can support 100 different companies. So I think some markets are oversaturated. I'm not going to say which ones, but I do think it is the case that there are more companies, more Bitcoin treasury companies than will succeed in specific markets. And part of what we've seen over the past 3 months is that I think we've seen some of the winners emerge, some of the likely winners emerge. The story is obviously not fully written yet. And I think that this period of tough market sentiment is, we're really seeing investors. Investors are very savvy. They pay attention to every single move these companies make. Some of these companies have not made any moves for months, and investors are sniffing that out. And I think that there's a great sifting and sorting period going on right now that is going to result in some consolidation. Whether that's some companies they just cease activity, or there's some M&A, or some companies completely reverse course. There's many different outcomes, many different possible outcomes. But I do think that the industry is kind of on pause right now in terms of new companies going to market. We might see some. If we have a stronger fall than we're having right now, there could be more. But as of right now, I think the industry is very much in consolidation phase.
Right. Yeah. And that's interesting that you said, if the basically you were saying if the price goes up into the fall of Bitcoin, that you could see more. So it's almost like the price of Bitcoin brings attention to it as an asset and as a treasury reserve. And even though those companies would be able to acquire less of it if the price goes up. Um, And you also mentioned another thing there, M&A happening, mergers and acquisitions. This is something I've been thinking about, which I think, yeah, I mean, those could happen in consolidation periods. But if there's a bear market, I could really see like the Bitcoin treasury companies of size and scale and ability of kind of acquiring some of the Bitcoin maybe directly, or even the companies themselves, from the companies that want out of this strategy. Do you think that's a possibility?
I think it's a definite possibility. I fully expect to see some of these mergers take place. I mean, if you get a company that gets in trouble during a bear market, is trading at say zero point 0.5, 0.6 mNAV, that's a very attractive takeover target for some Bitcoin treasury company. Of course, it also brings added complications. Saylor has said that one of the riskiest things that you can do is acquire a company because it just adds all kinds of complication. Probably the simplest thing to do in an acquisition would be just, well, I really shouldn't speculate too much further on that, but yeah, there's potentially an opportunity there. We've already seen some treasury companies build business models around acquiring undervalued companies, not specifically Bitcoin treasury companies, but that's one business model that's already out there even, and that's a bull market strategy. So in a bear market, I only have to think that more companies would attempt it.
That makes sense. Yeah. So I think the other thing here that people are kind of feeling right now. I've talked to a lot of people that are, uh, they maybe bought a local top in one of these Bitcoin treasury companies, whether it's Strategy or another, and they're thinking, should I just sell this and buy Bitcoin? I think that's like the first thing. That's the thing they feel, but it's also almost the first thing you think of when you first begin to look into what a Bitcoin treasury company is. You just think, why don't I just buy Bitcoin? Right? Bitcoin is the thing that they're all buying. Why don't I just buy Bitcoin? I know you talked about it a little bit at the beginning, but um, can we go a little bit deeper into like why this is a different asset than buying Bitcoin, and how is it a different asset than just buying Bitcoin?
Sure. Well, yeah. I mean, I cover I think that the financial mechanics of it, but one other aspect you always have to consider is that Bitcoin is a bearer asset with no counterparty risk. A Bitcoin treasury company is a corporation where it has management risk and execution risk and potential liquidity risk and all sorts of other risks that you don't have with a bearer asset. Fundamentally, you have to ask yourself, do I believe in this management team? Can they execute? Can they continue to raise? And those are questions that I would not be appropriate for me to advise on. Those are questions that every individual investor has to come to their own conclusions on. I can say from the H100 perspective, there are a couple things that we do to mitigate our risks. We maintain an 18-month fiat runway. So if there's trouble in the markets, potentially for extended period of time, we maintain a runway to help us, stay operational while that's taking place. Because one of the biggest risks is that you might have the greatest plan in the world, but if the market moves against you, such as with the Bitcoin bear market, you could run into a situation where you don't have the time or the liquidity to execute on your plans. You need both. You need both timing and Bitcoin thesis proving correct for the Bitcoin treasury company thesis to work out. So yeah, those are a couple of the fundamental differences. Is that the risk management on the Bitcoin treasury company side is significantly higher than what is required for someone who just wants to buy spot Bitcoin. So it's something you should think about. I've heard one of my friends always says one of the great things about Bitcoin is I don't have to be a portfolio manager anymore. I don't have to look at all these things. I just buy Bitcoin, I stack it, I'm happy. With the Bitcoin treasury company, you do need to think about these things. You need to think about management. You need to think about execution. You need to think about risks. And that is part of the trade-off for buying an asset that potentially has an upside above and beyond Bitcoin. Not guaranteed, of course. But yeah, I mean, that's what the investment thesis is.
There was one of your tweets. I can't remember exactly what it was, so I'm paraphrasing, but it was something like you don't need to buy every single one of these, right? Like it's like you don't, you just collect them all. because there's another Bitcoin treasury company every week, right? At least it seems.
Yeah, I remember which street you're talking about. It was during the time when like so many of the before I joined H100, when just like it seemed like there was a new one coming to market every day. I said, Bitcoin treasury companies are not Pokemon. You don't have to collect them all.
Exactly. Yeah, not Pokemon. And what you kind of alluded to there is that these Bitcoin treasury companies have additional risk being a corporation as opposed to a bearer instrument, and hopefully additional reward. Right? If you take on additional risk, you're speculating that there's additional reward there. So you're kind of going out further on the risk curve by investing in these, and each one of these seems to have different risks and different reward potentials, right? So it's like it's really a researcher's market to like figure out, and obviously you're taking bets and speculation as an investor on any one of these. Do you think that there's anything that people should specifically look for when they're looking into these different Bitcoin treasury companies out there?
Yeah, I mean the most fundamental thing about a Bitcoin treasury company is, do they have the ability to raise capital? Because if they don't, then I mean that's what the whole business model is: raising capital to create to deploy into Bitcoin and increase Bitcoin per share. So that is, first and foremost, the thing I would investigate is, does this company have a successful track record of raising capital or a path to it? I think another consideration is the jurisdiction it's in. Is it in a jurisdiction where it can operate? We've seen Bitcoin treasury companies pop up in some jurisdictions where they can operate, and they have, basically done nothing for, going on 8 months now, just because they face a difficult regulatory environment. So, and another factor you might look at is interest rates. One of the things that if a fundamental part of the trade is arbitraging Bitcoin CAGR versus interest rates, well, then obviously jurisdictions with lower interest rates are going to be more favorable than ones that have higher interest rates. For example, Sweden, which is where H100 is listed, we tend, if you look over the past 10 years across the yield curve, tends to have structurally lower interest rates than the United States. So there's a potential jurisdictional advantage there if we were to issue fixed income instruments or credit instruments into the Swedish market. On the other hand, there are some jurisdictions where the government benchmark rates are, let's say, 14-15%. That is a much more difficult environment to raise capital in if you need to pay a further premium above that rate in order to raise capital.
You said that the sort of the business model of these companies is raising capital. Is there a future where that becomes like where it's just either through saturation or just through the market not having an appetite for that anymore, or these companies, yeah, I'm not 100% sure, but just like a future where that isn't really as possible anymore, where maybe this is just a moment in time where companies can raise a ton of capital just for the acquisition of Bitcoin. And then at that stage, what do these companies do? Like, do they have to create income from their Bitcoin holdings or something like that to continue operating?
Yeah, so if you take the long view that you're just raising money to buy Bitcoin forever is something I think obviously is not possible forever. It is, moment in time makes it sound short. I think the runway is, perhaps 10 to 20 years. It could be shorter. It depends how long, Bitcoin CAGR, does what it does. But the mark, I think, in my mind, is when does Bitcoin CAGR and interest rates collide? When does, if the spread that you're trying to capture is the spread between Bitcoin CAGR and interest rates, when does that collapse to a point that there's no longer spread arbitrage? And that would be because Bitcoin becomes a mature asset. Well, either Bitcoin could possibly fail. That's also possible. But if, as Bitcoin treasury companies believe, Bitcoin becomes an integral part of the future financial system, it's just not possible that Bitcoin increases at a CAGR of 30% forever. It's just not. So at some point, that CAGR will start to come in line with interest rates, or probably more likely just the overall growth rate of the economy. And at that point, we believe, H100 believes that the Bitcoin treasury companies of today will be the major financial institutions of tomorrow. And so there are things that you could do in such a future financial world that you really can't do now. You could issue loans, Bitcoin denominated loans. Right now, if I were to issue someone a Bitcoin loan, say I'm gonna let you borrow 1 Bitcoin, you're gonna pay me a 5% interest rate on it. Well, you're not just paying 5%, you're paying 5% plus. And if you're paying it back in fiat, you're paying it back 5% plus the appreciation of Bitcoin, which could be, you could be effectively paying 55% interest rate on on the Bitcoin loan, which is just completely unfeasible. But if Bitcoin CAGR were only say 5% in this future world where Bitcoin is fully integrated in the financial system, well then consumer lending, corporate lending looks a lot more feasible. There are also other potential lines of business that become feasible. If you could imagine a Bitcoin treasury company becoming sort of like the Berkshire Hathaway of the future, where they deploy some of the Bitcoin to invest in profitable companies that they think will exceed the CAGR of Bitcoin. So I think these are this is the range of possibilities that there will be in the future, and I think that certainly every Bitcoin treasury company should have in their long range view. Certainly H100 does, and I think really that inflection point is when the cost of capital starts to converge with the Bitcoin CAGR. The more market matures, the lower Bitcoin CAGR goes, the more these other use cases start to become viable, and that's when you'll see them being deployed. Whether it's 5 years from now, 10 years from now, or 20 years from now.
Yeah, it doesn't seem like any of the Bitcoin treasury companies out there are really rushing to move past just the accumulation phase that they might be in, or the capital raising phase to acquire Bitcoin to strengthen their balance sheets. I think it's working. These companies have gone from their market caps have expanded by adopting this strategy almost like universally. There's exceptions. Probably, I don't really know too much about them. I'm not super into the weeds of all of these, but for the vast majority of them, and pretty significantly for many of them, their market caps have increased a lot, and their balance sheet has gotten way stronger. So it seems like they're just like, this is what's working. Let's do this. We're in this phase in our business of just building our balance sheet, and then in the future, there will be these opportunities to monetize this asset in some way. That's kind of what I'm seeing and kind of grasping from what you said there.
Yeah, in my opinion, it's too early to be very specific about what that future business model could look like, because the financial infrastructure could look so different at the point that these other possibilities become viable, that we don't even know what those business models could look like yet exactly. And so I think it's right that right now the name of the game is accumulation. Probably for the foreseeable future, it's the focus is really going to be focused on accumulation, and it won't be closer till the time when some of these other potential lines of business become viable, that they really start getting serious exploration fleshed out and deployed. Yeah, right now it really the primary focus is on accumulation, and I think that'll be the case for at the very least the next 3 to 5 years, possibly longer.
You kind of said like it's uncertain of what the financial system is going to look like, the monetary system, what even the use case of these things are. A lot of this stuff is being built out. So, there are Bitcoin lending, Bitcoin loans, and all that kind of stuff, but it's pretty sketchy. Like, we're not that far away from BlockFi and Celsius and FTX and all these different things where you could earn some sort of yield off some DeFi protocol or something like that. It just doesn't make sense to try to extract a little percentage off of putting your capital at risk in today's environment. But those things could realistically be built out in a much safer. I mean, exactly. Like, again, we have to speculate on what this ends up looking like, but these things could be built out, and it could be a lot of power that these companies hold just by having Bitcoin.
Right now the my favorite meme about this is equals MC squared plus 5%. I think that really captures in well the prospect of deploying Bitcoin right now to earn some nominal yield on it. It's possible, but you also have to keep in mind that wherever you would deploy that Bitcoin to, they have to have a use case for it that is going to return the Bitcoin yield plus 5% in order to be able to pay that back to you. So And certainly, certainly, our business model and the business model of the Bitcoin Treasury Company is that Bitcoin itself is the one of the best places you can park cash in the foreseeable future. I think right now the focus is really just on accumulating Bitcoin and not on these, trying to add another, 2 to 5% yield on it strategies.
Yeah, absolutely. Yeah. I want to get into a little bit, maybe if I could just get you to briefly describe what H100 is, what they've done. I admittedly have Bitcoin treasury company fatigue. Like I dove super deep into strategy. I've gotten into Metaplanet a little bit. There's just so much. There's so many. I can't look at them all. I can't study the stats of each Pokemon. It's a lot to take in. So, admittedly, H100 is a bit of a blind spot for me. I'd be curious just to hear sort of like what you guys are doing, and what guidance you have for the future that's public that you can share.
Sure. So H100 is the first and largest Bitcoin treasury company in Sweden, and it was we announced the beginning of our Bitcoin treasury strategy on May 22nd of this year. And the company was originally a health tech company started by our CEO, Sander Anderson, that was brought public through a reverse merger. The H100 stands for Healthy to 100, in line with that health theme. And we started with an initial purchase of 4.39 Bitcoin. And in the space of just 104 days, we have broken the 1,000 Bitcoin mark. We now currently hold 1,004.56 Bitcoin. And we have raised a total of around USD equivalent $127 million in just that short space of a few months. So we have, in my opinion, we have done very well. We have been able to, consistently raise capital, consistently deploy capital, and grow into what is, currently the 44th largest public holder of Bitcoin. So, and I think what is interesting. What else is interesting about H100 is that we kind of straddle two different markets. We were the first and largest in the Nordics. One thing that U.S. investors probably aren't as aware of is that they know that the European Union is kind of a contiguous block, but the Nordics also kind of have a lot of like interoperable frameworks and such. So we straddle both the Nordic markets and the European markets. So we have access to both markets, which gives us any jurisdictional proposition in terms of building out our Bitcoin treasury. And one other thing that's kind of unique about us is that before Sanders started H100, another one of his companies was a company called FinPeers, which actually was a company that was built around doing private equity deals with family offices. And so, what you need for a successful Bitcoin treasury company, well, you need the ability to raise capital. And so our company was not, to a first glance, you might think, oh, health tech, Bitcoin, I don't get the connection. But if you look underneath the hood a little bit more, our company wasn't just a random company that decided to start growing Bitcoin, but it was a company built on top of an established network of capital raising. We had a pre-built-in capital raising engine that has fueled a lot of our success, and FinPeers continues to be a strong partner to H100 today. Something else that is, I think, a strong point for us. One of our early investors was Adam Back, OG legend in the Bitcoin space, and having him behind us has been very fantastic. He is able to very insightful individual, and I think so. Yeah, so the highlights. We started May 22nd of this year. We have broken 1,000 Bitcoin in the space of just 104 days, built on top of successful capital raising engine, have deployed both convertible bonds and private placement equity raisings to raise our capital. And one of the unique things that we're working on right now is a tokenized convertible bond that will be offered through a platform called Stoker, or Stalker, STOKR, that's the platform. So, and the way we are looking at doing it, it will be a Bitcoin denominated convertible bond. And the way we're looking at doing it, the details are not all announced and finalized yet, but I think the way we're doing it will be very interesting and will be a world first for the way we're looking at doing it. And we'll be excited to talk more about that as more details from that are able to be disclosed.
And that's on the Liquid network, because I think they did a Metaplanet one and a MSTR one.
Yeah, so there are several tokenized stocks trading on the Stalker platform, and yeah, it runs on the backbone of the Liquid network.
Yeah, cool. So you've done a lot of private placements to raise capital, which people, so basically, like the ATM, in some sense, is like a public uh, offering to raise capital. Do you guys have that sort of type of facility in the Swedish markets, or is that something that you've talked about, or anything like that?
We do not have the Swedish market. There isn't the same ATM style facility there is in the United States. So the typical workaround for that is that you work with a capital markets partner who issues shares into the market and either buys them from you, or Metaplanet, we've seen them do moving strike warrants. If we've seen other situations where it's just a share of subscription from the company. Basically, there's a lot of different ways to kind of replicate the ATM feature. If we were to launch one into the Swedish market, it would be another similar situation where we work with a capital markets partner and use some creative engineering to replicate the structure. It's not something we currently have deployed. To date, we've been primarily using private placements, as we've discussed. And I think it's typical for an early stage company. You really need to get to a certain size and a certain amount of liquidity and trading volume for the ATM becomes viable. We are, I think, approaching a stage where it's something we might consider, but I would say right now it's not something we currently have active, and that's a as you can imagine, all tools are potentially on the table, but that's not one that we're currently using.
Yeah, for sure. Absolutely. Yeah. So one thing that I wanted to see if I could get your insight on is um, the conversation around strategy, especially this past week, has been S&P 500 inclusion, and they didn't get in, which is pretty normal for companies on their first attempt or first qualification. The companies that did get in, Hood and AppLovin, they had already qualified previously and didn't get in that time, so they've been included in the S&P 500. Strategies in the QQQ, many other ETFs. I think there's even an ETF that has Bitcoin treasury companies with over 1,000. It's just sort of like part of the qualification is having 1,000 Bitcoin, and H100 just got that. Not into that ETF. I'm not sure about that, but they have over 1,000 Bitcoin. Is that something you guys think about internally? And again, only share the information that you're allowed to. Yeah, but is qualifying for ETFs, getting into ETFs where there's some passive flows to increase the buying of the stock, is that something that is important for a Bitcoin treasury company?
Yeah, I would say it's definitely important. The passive flows, not only the passive flows, but it also brings a certain amount of added liquidity and volume to the stock. Just as as people are moving in and out of their positions with the fund, that generates a certain amount of trading volume in the stock, which all contributes to liquidity, which all contributes to more people being interested in the stock to begin with. One of the conversations that you have as you move up the capital raising ladder, as you move up to larger players and larger institutions, is they need a certain amount of liquidity to get in and out of their positions. So it's all kind of one part of one big, it's a bit of overused term. It's all part of one big flywheel. That more liquidity begets more liquidity, and ETF inclusion, index inclusion is definitely a meaningful part of that, and certainly something that I think is desirable for all Bitcoin treasury companies.
We've covered a lot here. I think one thing that we haven't talked about, which is kind of crazy, that we're talking about Bitcoin treasury companies, but we haven't really discussed Bitcoin too much. Maybe I could just hear from you what it is about Bitcoin that's interesting to you. What kind of potential do you think Bitcoin has, and what drew you to it, or yeah, just what interests you about Bitcoin?
Sure. I mean, my Bitcoin story starts in, it's going to sound funny, it starts in 2005, before Bitcoin existed. So I had this moment. I've traveled around. I lived internationally in many different places and had many difficulties with banking. And I always thought, wouldn't it be great after one particularly difficult incident with banking? I thought, would it be great if I just had some kind of digital money that I could hold it myself? I could keep it on a USB stick, and then I could just take it with me wherever, and I didn't have to rely on banks to gatekeep me moving my own money. So every couple of years, I kind of just kept checking back in to see if something like that had been made yet. And surprisingly, I didn't actually find Bitcoin myself until 2017. Almost 8 years after 8 years after the Genesis block. But it was something that had kind of been on my radar to look for a long time. And I always, and alongside that, I come from kind of an Austrian economics, hard money advocacy type background. So when I discovered Bitcoin, I thought, okay, digital hard money. Yes, yes, just yes. This is what I want. So yeah, for me, it just kind of clicked right away that this is a great idea. My only kind of concern was, will this really take on? And my induction to Bitcoin was right before the blow off top in 2017. So the first time I saw Bitcoin, the price was around 3,500, and then in the space of a couple of months, it went up to 21,000, and back down to 3,500, all in the space of a couple of months. So it was a wild ride getting into Bitcoin. But I think like anybody, it takes maybe a cycle. I always say it takes 4 years to mint a Bitcoiner. You have to be around for a cycle. You have to live through the volatility. You have to see it come back. I think to really believe that there's that it has a future, it's going to stick around. Everybody thinks that they can deal with the volatility. To borrow Mike Tyson's phrase, everybody thinks they can deal with the volatility until they get punched by the face. Until they get punched in the face. But yeah, no, I think it solves a problem. It solves many problems. It solves the savings problem. People need an undilutable currency that they can save money in. They need, I think, in my opinion, I think about global trade a lot. I think about all the frictions in global trade, and all the frictions that are caused just by having like a million different currencies. Well, maybe it's a couple hundred currencies, but all that gets wiped away if you have a common currency that can be used across countries, that can be sent in minutes instead of hopping through several gatekeepers that take weeks, days or weeks to move your own money, that you have to get permission from several different institutions just to move around. So perhaps I think of it more from the personal perspective than I do from like from a larger systemic perspective. But to me, those are some of the things that make Bitcoin special and valuable. It solves the saving problem. It solves the money movement problem. It's good for the individual. I think it's good for global trade. I think it's good for a lot of different things. And I think the world on a Bitcoin standard will be a much better place than the world on a fiat standard.
Yeah, yeah, well said. And yeah, that savings problem that it solves is a problem that everybody in the world has. So that's pretty significant when you have a solution to a problem that every single person has, basically. Um, and we're kind of using other things that are less efficient at saving your time, stored time and energy, like Bitcoin is. One last thing here, we're coming up to an hour. I just wanted to get your thoughts on, there's sort of this counter side or this other side of the Bitcoin treasury companies, which is the crypto treasury companies. We've seen a lot of attention on whatever Tom Lee's involved with, that ETH treasury company there. What's your thoughts on ETH treasury companies?
Well, I think your thoughts on any token Bitcoin, or whether it's a Bitcoin treasury company or an ETH treasury company or whatever token treasury company, I think your thoughts on it really have to be tied to what is the future of that asset. I mean, you have to believe that Bitcoin is a future part of the global financial system to believe that a Bitcoin treasury company is a worthwhile thing to do. The same applies to an Ethereum treasury company. do you believe that Ethereum will be a integral part of the future financial system? If it's not, then that really calls into question the entire thesis of what that company is doing. I am not going to answer that question specifically. I will let other people come to their own conclusions about whether or not they think those tokens will be of future systemic consequence. But that is how I would look at it.
Fair enough. Yeah, fair enough. And I agree with that too. And I think one other thing that I would just put in there is, even if it is part of it, is the value going to accrue to that token or not? I think is another thing, which is it's possible that it doesn't with basically anything else besides Bitcoin, because there isn't necessarily the factors that make the value go to the token holder.
It's a good point. What is the use case of that token, or what is the use case of that chain? If the use case is a vehicle to deliver stablecoins on, well, we're already seeing right now the stablecoin issuers are moving to establish their own chains, which to me is not even clear that the need. If you have a fully centralized stablecoin, why do you need a decentralized blockchain? Why not just run it on a fully centralized server? Maybe there's some advantages there, but that use case alone cannot power blockchain, in my opinion. There's got to be another use case for it. In my opinion, the highest, best, and really perhaps only use case for a blockchain is for the native asset to be money. And if that's not the case, I really don't know what the purpose of the blockchain is. I mean, there might be other secondary minor use cases, but money, digital capital, that's the big one. That's the big one that really matters.
You said that there might be minor other use cases, but you don't want to bet on the minors.
If there are companies say that, or if there are people that they want to trade digital game tokens on a blockchain, I have nothing against that. It's not what I'm here for. It's not what I think will be the major use case in the future. But to each his own.
Yeah, to each their own, right? That's the idea of investing, right? It's personal finance, and people can make their own decisions, and these things all exist, right? And people can put their money, their time, their value wherever. Awesome, Brian. Well, I really appreciate the conversation today. Just as a final note, where can people find out more about you? Where would you like to direct the viewers and listeners?
Sure. So I can be found on Twitter as BTC_overflow. That is generally the best place to get in touch with me. You can DM me, you can comment on my posts. I'm pretty active. I will generally reply. Any questions about H100 or Bitcoin treasuries and companies in general, very happy to talk about.
Awesome. Yeah. Thanks again for being on.
Oh, thanks for having me.